Hello, everybody. The topic of this section is financial markets. In this section, we will get to know the financial markets and some financial assets such as equity and derivatives. What's the definition of financial market? Financial market is a market in which people trade financial securities, commodities, and other fungible items of value at low transaction costs and at prices that reflect supply and demand. There are various classifications of financial markets. By the location, financial markets are classified as specific geographic location market and non-specific location market. Sometimes, a market for particular financial instruments has a specific geographic location, such as the Shanghai Stock Exchange or the Shenzhen Stock Exchange, which are institutions housed in buildings in Shanghai and in Shenzhen, China, respectively. Often, however, the market has no specific location. Such is the case for the over-the-counter markets or off-exchange markets in stocks, bonds, and currencies, which are essentially global computer and telecommunication networks linking securities leaders and their customers. A different classification is by the maturity of claims being traded. The market for short-term debt, which means less than 1 year, is called the money market, and the one for long-term debt and equity securities is called the capital market. Money market instruments are mostly interested earning securities issued by governments, such as U.S. Treasury bills, and secure private sector borrowers, such as commercial paper of large corporations. Besides, many markets are today globally integrated and liquid, in which liquidity is defined by the relative ease, cost, and speed with which an asset can be converted into cash. Here, the asset means financial asset. One basic type of financial assets is equity. Equity is the claim of the owners of a firm. Equity securities issued by corporations are called common stock in the United States and shares in the United Kingdom. They are bought and sold in the stock market. Each share of common stock entitles its holder to an equal share in the ownership of the firm. In typical cases, each share is entitled to the same amount of profits and is entitled to 1 vote on matters of corporate governance. However, some corporations issue 2 classes of common stock, one with voting rights and the other without. Common stock has 2 features. First, it represents the residual claim on the assets of a corporation. The owners of common stock are entitled to any assets of the firms left over after meeting all of the firm's other financial obligations. For example, if the firm goes out of business and all of its assets are sold, then common stockholders receive what is left, if anything, after all of the various classes of creditors are paid what they are owed. The second feature is limit liability. This means that should the firm be liquidated and the proceeds from the sale of its assets not be sufficient to pay off all the firm's debts, the creditors cannot assess the common stockholders for more money to meet its shortfall. After the equity, let's get to know another basic type of financial assets, the derivative. Derivatives are financial instruments that derive their value from the prices of one or more other assets such as equity securities, fixed income securities, foreign currencies, or commodities. Among the most common types of derivatives are options and forward contracts. There are two types of options. One is call option, which is an instrument that gives its holder the right to buy some asset at a specified price on or before some specified expiration date. Another one is put option, which is an instrument that gives its holder the right to sell some asset at a specified price on or before some specified expiration date. Another type of derivatives, forward contracts, are instruments that oblige one party to the contract to buy and the other party to sell some asset at a specified price on some specified date. They permit buyers and sellers of the asset to eliminate the uncertainty about the future price at which the asset will be exchanged. We do not study derivatives more specifically in this section. In summary, in this section, we have studied financial markets with two classifications and two basic types of financial assets, equity and derivatives. That's all about this section. Bye.